News from the Bank of Canada with another important policy announcement on the central bank's rate. For more on this, we're joined by Alan Small, a senior investment advisor with the Alan Small Financial Group. And let's get your thoughts on the interest rate that actually just went up 0.25% or 0.25 basis points, so bringing the total to 4.5%.
Well, again, I think it was expected. I think all of us were expecting a 25 basis point increase. Obviously, it takes us now. We're going to have to see what the banks do, if they're going to raise prime rate to match, which we anticipate they will. Prime rate should be somewhere around 6.7% going forward, which means all of us that have variable rate mortgages, lines of credit, debts in general, unfortunately, our debt cost, the cost to carry that debt will now go up another quarter point.
This is the 8th time that the Bank of Canada has raised interest rates, all in an effort to reduce inflation or to curb it. Do you foresee that happening?
Well, it has happened, right? You know, the height at the peak of inflation, we were over 8% here in our country. Now we're down to 6.3%. Obviously, the Bank of Canada would like to see this a lot lower, closer to 2-3%. So we got a long way to go. I've always said, you know, these interest rate increases, are they actually the correct tool to use to fight inflation? I've always felt that the reason for inflation was more on the supply side, less supply of goods versus too great a demand of those goods. So I think if we can increase supply, I think that would go a long way to fighting inflation. But unfortunately, all the Bank of Canada can control is the demand. And what they try to do is reduce demand for goods and services by raising interest rates, trying to slow down the economy. Unfortunately, slowing down the economy has a lot of negative effects for the average person walking the streets of Toronto.
Let's talk about how it's going to affect the average person. I mean, this can have so many different things that it will affect. Let's talk about some of those, from borrowing money from the bank to housing prices, if you have a variable mortgage, as you said. Can you talk to us about how it will affect people?
Yeah, so you mentioned, you know, real estate or housing. You know, obviously, that's the number one thing that we see or to have an effect by raising interest rates. Obviously, mortgages are now going to be a little bit more expensive. People need to qualify for a mortgage at even a higher rate than the prime rate, usually prime plus 2%, just to qualify for a mortgage rate that is much lower. So the qualifying rate is even going to be even higher. So I think we can anticipate housing continuing to slow down. We've seen it slow down this past year as rates were rising. I think you could see housing, housing sales, housing starts, things slowing down right across the country. Also, again, you know, carrying debt. If you're a small business, you probably have debt. You've probably taken on debt to grow your business. Now those costs are a lot higher. You couple that with higher inflation, higher raw material costs, wages have gone up if you're a small business. So a lot of the costs of these small businesses have gone up substantially. You know, what is it doing to their bottom line? And we're starting to hear about more businesses struggling, perhaps bankruptcies down the road. So this is, unfortunately, when you look at higher interest rates, higher for longer, as the Bank of Canada has said, you're going to keep rates at these levels, maybe even go another quarter point perhaps in a month. We'll have to see what the Bank of Canada says. But higher for longer is definitely not good for the overall economy, for jobs, for real estate, for many areas that we've all, I guess, taken for granted over the last decade with lower interest rates.
What will this do to the markets?
Interesting enough, I don't think it's going to have a big effect on the markets. You see, I think when you raise interest rates here in Canada, probably the biggest effect it's going to have is on the things that we've just said. Also, the dollar, the Canadian dollar versus the U.S. dollar, that may move as well. Perhaps maybe some of the bank stocks could feel some effects. But overall, the stock market tends to move with what they're doing down in the U.S. Now, the U.S. is also raising interest rates. They have a meeting next week. There's anticipation that they'll raise a quarter point as well. That will probably have more effect on the Toronto Stock Exchange and the North American exchanges, more so than our rate increase today.
Thank you so much, Alan, for your insight and all of the information you gave us. We appreciate it, and I know so many people out there listening in as well. Thank you. We appreciate your time.
My pleasure.